Let's get it. It's been a while since I've done a market update, and with a very important weekly close coming up for Bitcoin, I thought it was about time. Today we'll be looking at what the Fed is up to, what they've been saying recently this past week, looking at assessing Bitcoin's chances of a potential year-end breakout here, as well as some other metrics that are showing that we potentially still have a long ways to go in this cycle. So let's go. What is up, everybody, and welcome to the Crypto Cabin. My name is Tom, and in today's video we are going to be talking about Bitcoin and just in general doing an overall market update. If you're new to the channel, please scroll on down, leave this video a thumbs up, then hit that subscribe button, select the notification bell, and press on all so you get notified for when I post these new videos. Without any further ado, let's jump right in here. So Bitcoin, like I said, weekly close coming right up here. By the time I get this video up, it could already have been the weekly close. But it is very important to watch that as we are flirting very, very closely with this 200-day moving average. Typically, closing below that 200-day moving average on the weekly is not a super bullish sign. We could come down like we did back here in May and spend a little bit more time below it before trending back up. However, we did come down here and close below that back in September. The next week, we shot right back up. So it's not necessarily the end of the world if we do close below it. However, we are more likely to continue a downtrend if we do close below it. So we got to try to hold the line here on the weekly time frame. This is also the downward sloping trend line from the peak back in April to this local high kind of back in September. And we have now bounced off of it for multiple weeks. So that trend line and the 200-day EMA or the 200-day moving average are converging, and that is an area right at around 46,000, just above 46,000, which we're at right now, is where we will need to hold if we want to stay here. If we come over to the 4-hour time frame, a little bit shorter, we'll see that we are potentially forming a falling wedge on the 4-hour time frame here. A lot of people are calling this a descending triangle as well. If you kind of take more of a flatter look at this, it could be a descending triangle as well here. Descending triangles would typically break to the downside, and so we could see something like this. If we do break down, we could see Bitcoin get back down to around 40K, which would be a lower low, not ideal. But we could also look at this more like it is right now, kind of a descending wedge almost. So with that being said, if we were to do that, the target would be near the top of the wedge, which would be back at around 52,000. If we were able to do that, it would bring it back above this upward sloping trend line, which would be, in my opinion, obviously very, very bullish to get back in there. On the daily time frame here, we can maybe see this descending wedge coming up a little bit more clearly here. If you bring it something like that, it does look like it could potentially be a falling wedge, which is typically a bullish pattern. So we will need to wait and see how this plays out. We're still within it, but if this were to come all the way across there, it would get resolved by Christmas pretty much. Right around Christmas time, we would need to make a decision point whether we are breaking down or breaking to the upside. On the daily chart here, we also have a few very bearish crosses with the daily EMAs. So the 20 has already obviously crossed below the 50, below the 100, and now we are potentially crossing below the 200. The last time this happened on the daily chart was back here when we were crashing down big time from the previous all-time highs. We crashed down, the 20 did, below the 50, the 100, and then did crash down below the 200 as well. And we stayed there for a while. So after that crash back there, we stayed down below here before we started rallying back up for almost 2 months. So that is not obviously super, super bullish either. We could have a little bit more sideways action here and a sideways slash downwards for a little bit if this cross happens, which it is definitely going to at this point in time. It is very close. So that is more than likely going to happen any time now, any day now. And so we could be looking at something like this that happened back here in summer of 2021. It is really, really hard for me to see us going too much lower than where this wick went. This wick basically landed us exactly with where the peak was back here in January of 2021. So I can't see us going too much lower than that, but as always, just gotta wait and see what the charts tell us from day to day. Right now, this is what I am seeing, so keep an eye out for this weekly close coming up here. In other news, the Fed has sped up their stimulus withdrawal. Bitcoin jumped on that news, but has since obviously come back down. This is a little bit of an older article here, but just wanted to go over this. The faster withdrawal of the stimulus might provide an extra headwind for Bitcoin prices, when in a recent article they also said that it could provide a tailwind. So not very sure as to which way obviously the market's going right now, and everybody seems to be confused as well. But inflation is coming for sure as we see it, and that is typically what Bitcoin is used for, right? It is thought of to be used as a hedge against inflation. So that could also be potentially bullish for Bitcoin here. The Fed is doubling the pace of tapering with its monthly bond purchases, reducing them by $30 billion every month until they completely wind it down early next year. So this is doubled from what it was. It was at $15 billion. So this will result in the asset purchases ending in mid-March. And he feels the economy no longer needs this increasing amount of policy support. The consumer price index is also extremely high. It climbed to 6.8%, which is the highest it's been in 39 years. This is a very key gauge of inflation, so another reason obviously to expect inflation to come, which we do know. Obviously, if they print, how many trillions of dollars, they basically have 8.7 trillion on their balance sheet, and it's doubled since the start of, or since early 2020. It's doubled. They can't just print that forever and not expect inflation to come into play, which leads a lot of people to believe that Bitcoin would do very, very well, and so would the rest of the cryptocurrency space. However, there's a lot of uncertainty, and typically Bitcoin and cryptocurrency does not like uncertainty. And this article sums it up pretty well. On one hand, tightened monetary policy may lead to less rapid growth of Bitcoin demand, as many use it to hedge inflation, and less quantitative easing, in theory, means less inflation. On the other hand, the effects of large quantitative easing in history may lead to the largest inflation in history, regardless of the Fed attempting to scale back. If this happens, we expect demand and prices for Bitcoin to rise to a new all-time high. So, in short, we don't know where this is going. I don't think anybody ever does, or ever really has. In the short term anyway, it's very tough to predict or tough to understand. Long term, I'm still extremely bullish on Bitcoin and crypto as a whole, because we have crypto becoming impossible to ignore as it ropes in more Wall Street investors. And I know maybe you don't want all these big players to come into the space, but it's obviously going to bring a lot more capital. So if you're in now or have been in for a while, you are in a way better position than anybody who's maybe just entering into the space. So basically there was a survey done here, and 1 in 4 hedge fund managers are expecting to increase their exposure to cryptocurrencies over the next 1 to 2 years. And 20% of the surveyed institutional investors are claiming to do the same. Basically, it's looking like we're going to have more investors coming into this space, and there's a lot of assets under management by these firms. Just taking a look here, it's been growing obviously since the early or the late 1990s, now into 2020. We are up at almost $4 trillion worth of assets under management, and we've got anywhere from 1/5 to a quarter of those people potentially increasing their exposure. So that is obviously going to bring a lot more capital into the space. Like I said, shorter term, really hard to know where it's going to go, but when we take a look at here, this article is summarizing that there are a lot of things that could potentially be leading to an end of the year breakout. I do think that people do need to take profits before the end of the year, but they may have already done that back in November when we reached this peak here at about 69,000, and now we've had this break down to the downside here. That could have been, people seeing Bitcoin reaching new all-time highs here. They're taking profits up here, and then they are ready, and we're kind of almost like reset for another run in 2022 here. At least that's the feeling that I am getting. But here we are looking at Bitcoin address count inflows. So when this is inflows to exchanges, so when this increases, we see a downtrend shortly after. So we've seen a spike here, downtrend, spike here, downtrend in the price. And right now we are very, very low on those inflows, and the price seems to be stabilizing. Here is another metric that is showing the macro tops, about where they line up with this check-in money flow, and this is in relation to macro tops. And here it says that a macro top in CMF usually comes alongside a cycle price top preceded by some consolidation, as is the case right now. So looking at 2013, that's what happened there. That's potentially where we are, and we could potentially have a run up here into 2022. So where do we stand right now? Well, Bitcoin supply demand dynamics have mostly been bullish throughout this quarter. The bullish divergences looking more prominent for Bitcoin. Could be prepping for big things in the mid to short term. So this supply shock ratio here, it's basically on its way to its biggest divergence since November of 2020. What was happening in November of 2020? Well, we were right here, and we were in the middle of this big run up from about $15,000 all the way up to $40,000-ish. However, for Bitcoin to start rallying here, it's crucial for the open interest to show a relatively higher hike when compared to the price. So for now, the open interest seems to be relatively stable. But if we do register some noticeable movements, we could be getting ready for another leg up. And that's to me what it feels like. It feels like we are having a lot of just sideways consolidation right now. And this whole thing, I mean, it's a big range, but this whole thing looks like just sideways consolidation. And we could be seeing the next big leg up. Like, you look at this range here compared to where this was from here all the way up. We've got a potentially bullish scenario happening here for the beginning of 2022, I believe, potentially in and through quite a bit of 2022. A lot of these metrics are starting to reset. When you go to look into bitcoin.com, there are a lot of metrics that are kind of resetting. Yes, we did get a little overheated in March, April, May. We've kind of come down and we've started to reset a little bit. This golden ratio multiplier, we spend very little time down under or around this orange line here at the bottom, and we are right now kind of just hugging it, staying between the orange and the green. When we take a look at a bunch of different metrics, we are cooling down as well, like the MVRV score and the reserve risk. We are very near to this green zone here, which is a major buy territory. So we could trend sideways and this could keep coming down, and we could be in a major buy zone here very, very soon. A lot of people have been scooping up this dip, lots of whales. As you know, you can research and take a look at a ton of different articles showing that whales are still accumulating. On-chain metrics are still positioned as bullish for the most part. And so for the rest of 2021 here into 2022, long term, like I said, looking very bullish. Short term, it is very undecided. So my plan for over Christmas is going to be to relax and try to enjoy the time with our family, not worry too much about what the price action is day to day. I've got my altcoin bags packed, and we're looking for a Bitcoin rally to the upside, and then altcoins to follow, of course. But I will be holding tight, watching this weekly close here this next week to see, and then position myself for the Christmas holidays to have a stress-free, relaxing time. If you're looking for another great resource, I'll put this in the description below, but this is coming at you from Masari.io. They have a 2022 theses. So there's a few key trends, people, companies, projects to watch out for in 2022. And like I said before, I do think 2022 is going to be another bullish year for crypto. We will need to wait and see, of course. So that is it for today, everybody. Thank you so much for watching. And if you got some value out of this video, please scroll on down, leave this video a thumbs up, and hit that subscribe button. Click that notification bell and select all to get notified for when I post these new videos. I appreciate each and every single one of you, and I will see you next time on the next episode from the Crypto Cabin.